Hello, everyone, and welcome to another great episode of the Jason Howell Company's speaker series, Zoominars. My name is Jason Howell, and as always, I'm very happy to share my network not only with our Jason Howell Company clients, but also with all of you watching now, and those of you who'll be watching later. Welcome. Today, we've got a great show. A lot of our investors have asked us how they can get more involved in the community, how they can get more involved in making better choices with their investments, more responsible investments, more sustainable investments, just doing more good here in this crazy year of 2020, which is finally almost over. To do that, we have found different partners throughout the year to work with, and we invited one to come and share some of what they do with us today. That firm is Open Invest. We're very excited because what they do with financial advisors works with the people that they serve as well. So it's a win-win-win when you talk to partners like this. We've got two folks from Open Invest today, but before we get into all the details about what they do and how they do it, let's just meet Sarah and John. So Sarah, let's start with you. How has your day been, and how was that special meeting you had before the Zoominar today?
So I was just telling Jason, Jason before this meeting that I had my 1 month check-in. So I've officially been with Open Invest for 1 month now. But John mentioned it's felt like forever, and I would agree.
No, well, we're glad to have you. And I know Open Invest is glad to have all your previous experience as well. So good for them and good for you. And John, how has your day been today? Hopefully no meetings with the boss, but busy?
Yes, no meetings with the boss, so I definitely dodged that bullet today. But busy, yes. Had a few client meetings this morning, and excited to be here talking with you today, Jason.
No, well, we're so happy to have you and your expertise, both you and Sarah. Well, I think we've got a few folks that are in, so I'm going to go ahead and start sharing my screen. There you go. Smooth as ever, sharing the screen. And I'll clean up this so that we have a nice screen to look at for the future after this is recorded. If you came to values-based investing for 2020 and beyond, you've come to the right Zoominar. We are very happy to have both John and Sarah from Open Invest guest with us and share some of their expertise. And we're going to get into that in just a couple of minutes. But before we do, a word from our sponsor. So Jason Howell Company, of course, is our sponsor. We are a family wealth management firm that works with folks who want to become patriarchs of their community, not only with maybe donating or participating in volunteering, but obviously in the way that they invest. We've discovered over the years that you can do a lot with your investing to help the community, which is exactly why we look to partners like Open Invest to assist us with assisting our clients. As we go over the next few years, we're going to be doing more and more of this kind of work and hopefully tracking the impacts that we're all having on this earth, in this country, in our communities. The most important thing we can do is put some purpose to our profits. And so we're really happy to have our guest today and happy to do the work we do. And with that, we will go over to Sarah Sung, MBA, and get to know her a little bit more before we dive into all of the details. And so, Sarah, we've got your bio here. You know, we all know that these bios are always much shorter than the very interesting lives that we all lead. But before you got to Open Invest, you did a lot of things, worked for a lot of companies, startups, got to pick up some really interesting experiences. Can you tell us a little bit about that?
Yeah, so in addition to the MBA acronym, I actually also am a CPA. So you can add that on, another
Wow. Wow. Okay.
So I spent a good chunk of my beginning years at Fidelity Investments, which you may have heard of, and then decided I wanted to go back to business school. So I did. I went to Columbia for 2 years, and then I spent the last 5 or so years working at various tech startups that were essentially dealing with digital media properties. So think of like a Washington Post or USA Today. So those were the types of clients that I formerly worked with in some of my previous positions. And in those previous positions at the tech startups, I would say that I was mostly focused on the account management side of things. So really developing partnerships with clients and helping them grow and achieve whatever goals that they had. So that's essentially what I've been doing for the last 5 years or so. And then I very recently, joined Open Invest because I wanted to transition into a fintech role that was focused on social impact. So social impact is a particular passion of mine, and I wanted it to be reintegrated into my actual work. And so that's what led me to my current role here at Open Invest.
No, that's terrific. Now, I'm I'm an accounting major, former accounting major, I guess the same difference since it was, 20 years ago. Can you tell us maybe how that accounting background, I wasn't summa cum laude like I know you were, but can you tell us how that accounting background has informed the kind of work that you do with this kind of investing and even your business development that you work with other financial advisors for?
So honestly, I don't use my CPA at all.
Oh, this is heartbreaking. I wanted to hear how amazing the CPA has helped you.
No, I mean, I took the test and then I haven't looked back since. And this is probably straight out of undergrad.
Yeah.
But yeah, I mean, I think it just gives you that context for understanding the fundamentals of finance and accounting. And that's really important for working at a company like Open Invest that's focused in, the financial services sector.
Yeah, I agree. I mean, fundamental analysis is one of the kinds of analyses that financial advisors, investment advisors can do. That's all about the financial statements, and having that background as a CPA, even if you don't care about it anymore, there is some tacit knowledge that you have that a lot of folks just aren't born with. And so it's great to have you as part of this team. And I'm sure it's great to have you as part of the Open Invest team. Thank you for being here.
Thank you.
And John, looking forward to hearing a little bit about you. Again, we've got this small snippet of what your background actually is. We do see that you worked at Edward Jones for a short time, a competitor of many financial advisors out there. I think they manage about, what is it, a billion assets. So they're a big firm, do a lot of stuff. But you've also had some experience with some analysis, a firm that does analysis for financial advisory firms. Can you tell us a little bit about both?
Yeah, happy to go into that. Sarah, tough act to follow there, but I'll do my best. Just quick background about me. I've worked in finance and finance adjacent companies, and what I've really discovered as a passion of mine, and what led me to Open Invest is the opportunity to work with investment professionals and work with financial advisors, Jason, like yourself, and really helping to understand how to make your business and your practice even more elevated from where it is today. And I really appreciate and like that partnership and working with investment professionals in that capacity. And so I've done that with my time at FactSet, which is a data and analytics provider, so providing a wide variety of different software services and analysis to those different investment professionals and firms. And so certainly enjoyed my time there. And then transitioning to Open Invest, it was definitely a great combination of my passion for finance, but also still having that very technology enabled element that Open Invest brings to the table and be able to work with advisors. So that's really what excites me about being at Open Invest.
And, one little window that I think was something that you and I kind of bonded over when we had our first conversations was around Ray Dalio and principles and, that book and his concept. I'm getting emails now from Ray Dalio for his second book that he's putting together. How far have you gotten into the principles book? Did you finish it?
So I did actually. It was coincidentally that I finished the book prior to even hearing about Open Invest, and so it was really an interesting timing of when that happened. I was reading that book and then found out that two of the co-founders of Open Invest actually spent a great deal of time at Bridgewater Associates. So very interesting timing there, and it was certainly an interesting talking point as I started to explore Open Invest.
Yeah, more than a talking point. I mean, Bridgewater, one of the most successful hedge funds in history, Ray Dalio, one of the most successful investors in history. And to think that there are a couple of principles that are now part of the leadership for Open Invest, that was attractive to me for someone who is certainly impressed by their success over the years. I imagine Open Invest will have some similar success. At least that's my hope.
We hope so as well.
I bet you do. I bet you do. I bet Sarah does. She just got there. Come on. That's
yeah,
great.
definitely.
And I'm glad you went to Dayton. That's where my wife went to school. So cum laude or summa cum laude, doesn't matter. You're a good egg by me since
Perfect.
I don't know if you were, since my wife went there. All right. Well, let's get into what we came to learn about today. Your firm is a specialist in this area of values-based investing. Our firm is one of many advisory firms I know that's probably at least had conversations with you about partnering on how we can take the knowledge we have of investing and combine it with the knowledge and the tools Open Invest has to invest according to the way we believe when it comes to our values and less risk and less volatility and more opportunity to do some powerful things with our profits that have big purposes. But before we sort of get into all the details, let's just talk in a big way. What do you consider, I guess we could start with you, Sarah, and then John, you can answer as well. What do you consider values-based investing?
So values-based investing is otherwise known as socially responsible investing. So you may have heard that term SRI more commonly than values-based investing. But essentially it's aligning your investing strategy or portfolio to your personal values. And I think for Open Invest, we wanted to call out values-based investing because we really feel strongly about that alignment piece to your personal values. And so values can mean a lot of different things. So here at Open Invest, we actually have over 20 different values that a person could potentially invest in, and that ranges from supporting employment of our veterans, or investing in racial justice, or supporting our LGBTQ community. So it really ranges the entire gamut. And yeah, that's essentially what values-based investing is in a nutshell.
Thank you, Sarah. John, anything to add there?
Truthfully, nothing to add. I think she summed it up perfectly there. And that's really the goal of Open Invest, is really taking an individual's values and allowing them to align their investments to that. And that's really what we strive to do, and we strive to allow financial advisors and to do for their clients as well.
No, terrific, terrific. Well, maybe we can get into this other kind of quirkier acronym, but I think from my studies, it's certainly a broader term as well. John, can you explain what ESG analysis, some call it ESG integration, actually is?
Yeah, so ESG integration and ESG analysis, so environmental, social, and governance, are different ways and different lenses to look at the investment world. And so, what ESG integration really is, it's the explicit and systematic inclusion of ESG issues into investment analysis and investment decisions. And so, some of the leading practitioners out there are not only analyzing financial information, but also analyzing ESG information. So as kind of Sarah mentioned, some of those different values that you can look at and ways to look at companies for the things that they're doing in line with those different buckets. So it's certainly, we see investment professionals out there that are assessing these different, not only financial information, but ESG information. And that's really what integration means. It doesn't necessarily mean, though, that certain, sectors or countries or companies are prohibited from investing, or, traditional financial factors are ignored as a part of the overall investment process. It doesn't necessarily mean that, every ESG issue for every company must be assessed or valued, or every investment decision is affected by ESG issues. Also, it does not mean that portfolio returns are necessarily sacrificed to perform ESG analysis and integration techniques, but it really is just kind of this all-encompassing practice of including that into the overall investment analysis. And while there is a great deal of overlap, and we're talking about values-based investing, while there's a great deal of overlap between ESG integration and values-based investing, there's also many ways, though, that you can express values into a portfolio without considering the materiality of those values to each firm. For example, underweighting companies in a portfolio that rely on destructive forestry practices is not necessarily a decision that reflects the view on increasing one's financial returns. It could simply be a decision to not support those firms and instead invest more significantly in, firms with less destructive forestry practices. And while there may be long-term financial consequences to better forestry practices, that isn't the primary, reason for the decision. So there are pieces where there's overlap between, ESG integration analysis, but also some differentiation there between then values-based investing.
Like Sarah said, there are over 20 categories at Open Invest. My father-in-law is a forester, so you mentioned forestry, which not everyone thinks of first, but that's certainly a big category.
Mm-hmm.
I want to underscore something or clarify something that you said, though. You mentioned that ESG analysis doesn't necessarily rule out, for example, oil industries or oil companies or different companies that people might immediately think, oh, that firm is a bad firm, and so that company is out of the portfolio. ESG analysis is something different.
Yes. And so looking at something like, you brought up, for example, oil and gas and looking at that. And, when you're looking at that through ESG integration, it doesn't necessarily mean that all companies or an entire sector needs to be excluded or removed from a portfolio. There's certainly, ways to look at it. For example, if you look at something along like a bell curve, if you take a sector and look at, the companies in that sector on a bell curve and realize that there are, maybe a top 20% that have some of the best practices in place for a particular, issue that you're looking at, for example, reducing greenhouse gas emissions and, maybe identifying those top 20% as opposed to the top, bottom 20%. There's certainly different ways to look at it in terms of that lens there.
Yeah, and I guess it's not eliminating, right? You could, as you said, underweight, which is to say maybe you'll take some of the money that you had invested in XYZ company, you'll reduce it and then add that money to something else.
Exactly.
Got it. Well, Sarah, I want to ask you this next question about Open Invest, because having gone through orientation recently, having studied under John, meeting with the CEO just now, you might have this answer down pat more than anyone. How does Open Invest make this kind of investing easier for financial advisors for their clients?
Sure. So as I mentioned, we have over 20 different values that you could potentially choose from. It's not to say that you have to pick all 20 because there's probably some that don't align with your personal values, but we actually enable advisors to work with their clients and have that conversation to understand what are the values that you care about the most. What are the ones that you really want to prioritize in your investing strategy? So what you can do is work with the client and say, okay, so you feel very strongly about supporting the LGBTQ group, or you feel very strongly about reducing greenhouse gas emissions. We can actually select both of those values in addition to many of our other values and have all of those values reflected in one portfolio. And so essentially what we're doing is we're looking at a universe of different equities or stocks and saying, okay, so how do each of these stocks weight in terms of the different value that you care about? So is this a good actor as it relates to greenhouse gas emissions? Is this a good actor as it relates to supporting the LGBTQ value? And we have different criteria for each of those values, and they're pretty specific. So for example, the LGBTQ value actually looks at a couple of different things. So it looks at one, the Human Rights Campaign's Company Equality Index, and essentially that index is saying how well a company treats employees who identify as LGBTQ. So we look at that index. And then we also look at the Business for Transgender Equality, the statement and signatories, and make sure that companies who have signed on for that particular statement have been overweighted for that particular cause. So essentially, we're fine-tuning each of the criteria for each of these values and identifying the companies that are positive or negative for each of those values.
And I guess you're doing this with your technology. That's the big, delta between, say, a firm like mine or others that doesn't have that technology, and a firm like yours that, with the benefit of Bridgewater alumni, has that technology built in, and you're partnering with financial advisory firms. Is that right?
Yeah, so essentially, we have this platform that we call Optimus, and you're able to actually create custom portfolios with each of your clients on the fly. So you can actually select each of the values or causes that they care about, and then within 30 to 60 seconds, it will generate a portfolio for you and show you all of the results of whether or not a company is positive, negative, or neutral for the specific value that you selected. So it's pretty automatic.
That's wonderful. That's a great tool. We've played with it, obviously, and very happy that you brought it to market. There's a question here from the chat, and either one of you can grab this, John or Sarah. Can you share how often your methodology is updated for specific causes, and how often you add new causes?
Yeah, that's a great question. I can field that. So I'll take the last one first. So speaking about introducing new causes and bringing those to market. So we typically strive to have maybe a cause a quarter or a cause a half, but a lot of those are kind of based on, well, what are we being asked for? What are clients looking for? So we look to partner with our clients and say, what are your clients looking for? Are there certain things that we don't have today that your clients would like to see built in, to the platform and built in as a particular cause? So, while we are, pushing our own initiatives, we also like to listen and kind of hear what the market has to say and what our clients have to say. For the other question about methodology updates and kind of that frequency, we do by standard at least an annual review on our methodology, and also with that we're vetting, making sure that our data sources that we have picked for the certain causes are still the best ones that we can be selecting from, that they still have the best update frequencies in place, and they have the deepest data we can get on a particular issue. And Jason, as you know well, we're partnered with a wide variety of data sources to give us very specific and give us very robust and rich data on the different data sets and causes that we do cover. And so we like to make sure that stays updated and consistent. And so at a minimum, we're doing an annual review on those methodologies.
Thank you for that, John. And as I've been studying, there's a big difference between the reporting of even 5 or 6 years ago of the Fortune 500, let's say, to now, so that there is data available that's not necessarily financial statement data, but other data that those firms are reporting that a company like yours can source and really identify which one among these 20 plus causes are they supporting or ignoring.
Yep, that's exactly correct. And so, some of the information we get is self-reported from companies, and some of it we're leveraging from subject matter experts that we partner with that are going out and doing the investigation themselves. And so, as you mentioned, some of these companies now today are actually just self-reporting information that we can leverage and use. But we think it's equally as important to also then partner with nonprofits, NGOs, and other third parties that are doing some deep granular research, outside research on the companies themselves too.
Yeah, well, that makes sense. Trust but verify type stuff, or what have you. That's wonderful. Sarah, are you familiar with the public benefit corporation status of Open Invest and sort of what that translates to the common person?
Yeah, so Open Invest is indeed a public benefit corp. And what that is it's a legally defined status. So it's something that you can actually sign up to be in terms of what kind of corporation you are. So it's actually written into our legal charter and into our legal bylaws. So you may have heard of companies like Patagonia and Kickstarter. Those are also public benefit corporations. And essentially what this status allows us to do is to pursue a public benefit as a legally defined goal. So for example, we can actually withhold distributing dividends to our shareholders if we feel that those funds are better off reinvested in social and environmental outcomes. And furthermore, I would say that it protects our mission in the event of future capital raises or leadership changes or anything else that kind of happens in the normal day-to-day of a corporation, it makes sure that that public benefit stays true to the core of the company and its mission. So that's why our company has decided to become a public benefit corporation.
Yeah, thank you. And you said this is something that the company has put essentially in their charter, so it's registered with the state that they're headquartered.
Correct. Yes. So we legally have to do this.
Okay. All right. Well, thanks for sharing that. It's something that our firm has looked at and here in Virginia, and it's not the worst thing. It's not the worst process to go through, but it's really a commitment, and it's a very exciting commitment to make. I think partnering with a firm like yours allows a firm to say, well, we are doing that. We are looking at different ways we can service our clients, and by doing that, serve the community. So thank you for sharing that.
Yeah, no problem. And I would just add that it's not only a commitment, it's really just a public statement as well. So you're putting yourself out there and saying, this is what we're doing and this is what we're committing to.
Terrific. Really great. Well, we don't have another question from the chat yet, but this final question we have here, I think it'll be great to hear from both of you, your perspectives as to what you see as the future of this kind of investing. It's got so many names. There are so many myths. It's ever changing. John, we'll start with you. What do you see as the future of this kind of, I guess I would just call it intentional investing?
Yeah, I can start with that. And, thinking about today, the kind of current picture of professionally managed assets, right now it's almost about a fourth of professionally managed assets are in some way, shape, or form ESG, SRI, whatever term you'd like to use, managed like that today. So currently we're seeing that at about, around a fourth of that. And there's been a significant increase over the past few years, and this continues to grow. So, we believe that there's really not much doubt that this is going to continue as a trend. And as you even mentioned earlier about kind of disclosure about certain companies and what they're disclosing, that's becoming a trend in itself. And, the public companies out there, are increasingly disclosing specific ESG information, and it's becoming the norm. Starting next year in Europe, it's going to be law. And so the next, wave of ESG investing that we see is, going to rely maybe less on some of the opaque and aggregated scoring information that is dominating the landscape, but more so on, detailed reporting and specific and consistent metrics and, clear human equivalencies of the impact that companies are having on their employers, customers, communities, competitors, et cetera. So we believe the next wave here is really going to be into the visibility and transparency behind ESG, SRI impact investing. And, that can be unlocked through, the different types of reporting that will come with that, and really other measures that come into place. And so that's kind of what we think we'll see the next kind of evolution of the space.
By law in Europe, disclosing that information, that's certainly something. And I do believe there's something in the 2010 Dodd-Frank bill that speaks to reporting in this way as well. If you're familiar with that at all?
I'd have to double check. Maybe Sarah might know, but I'd have to double check on my end. But that's probably a fair point.
Yeah, it's pretty interesting, pretty exciting to see this. 25% of all investing in the United States has gone towards this recently. Fascinating. Sarah, what do you see as far as the future of this kind of investing?
Yeah, I mean, I would say a lot of what John said is definitely true. I also see that, not only becoming law, but also I see things changing within the United States. So for example, I don't know if you've heard, but the NASDAQ recently proposed a board diversity rule. So actually mandating that boards need to be diverse from not only a gender perspective, but from a race as well as sexual orientation perspective. So there's definitely change happening all over the world. And it's not only, from a regulatory perspective, but it's also, the indexes, the exchanges, all of those institutions that are also making this push. And then I would just say, just to reiterate what John was saying, I think standardization is probably one of the things that's coming with regards to ESG investing. I think you probably know this, and probably a lot of other advisors know this, that the data is inconsistently measured across different platforms and different systems. It's being calculated differently, it's being showed differently. And so eventually there's probably going to be a consolidation of efforts and a standardization so that it's more clear how X firm is measuring ESG versus Y firm.
And that's important. And that's one of the recommendations that have been coming from the governing bodies that are looking at this, the standardization, so that when we are doing our analysis, our fundamental analysis, we're analyzing in the same way with the same data. That would be nice. And what about the demand? It's not a question on the list here, but from what I understand, the reason that you have these Fortune 500 firms self-reporting and potentially looking at mandated reporting, it's not because they're being nice. I mean, there's a demand from institutions, from high net worth, from millennials, the largest generation, slated to continue being the largest generation for the next 30 years. Aren't they demanding this kind of reporting and investing opportunity?
Yeah, I mean, definitely. I would say the trends that John mentioned, the increase is actually a 90% increase in ESG investing assets over the last 4 years.
Wow.
So 90%, that's a huge number. And who knows what that's going to look like in the next couple of years, right? With all of the events that are going on. So I think it's most likely going to be a continued upward trend for sure.
Yeah, considering 2020, I don't see the new numbers coming in any lower, Sarah. Great point. Great point. Well, I'm going to stop the share, and you all will be welcome to our big faces once again. So here we go. I've just really enjoyed learning more about, John and Sarah personally, and learning more about what they're doing at Open Invest to partner with firms like ours to give us the opportunity, the muscle to go in there and sift through that data and then give our clients the opportunity to choose between 20 different categories of their own beliefs. That's just really exciting. I'd like to close with Sarah, so I'm going to start with John and ask the question I always ask. John, if I'm an investor, heck, if I'm a financial advisor and I'm watching this, what's a good takeaway that I can take away so that I can be a more intentional investor going forward?
Yeah, I think one of the things that we talk about with our clients every day is that everyday people are looking for things beyond financial returns, and I think that being able to engage clients about the things that matter to them the most, whether it's certain environmental preferences or maybe their religion or whatever it might be, can help develop and really strengthen that bond. And so I think ESG values-based investing is really a window into that and just strengthening the relationship between advisor and client. And that's really what we're helping to facilitate.
Oh, thank you, John. Sarah, same question. Give us one takeaway.
So, just based off of the stats that John presented before, it's clear that this is growing and it's much bigger than anyone anticipated probably at this point in time. And I think ESG investing is just going to become the expectation. It's not going to be an option. It's really just going to be the default.
Yeah, the default. Fascinating. Well, John Klinger, Sarah, CPA, MBA, brand new Open Invest employee. Thank you both for being here and sharing your expertise with us and all the folks who will be watching this in the future. I hope you have a great day. Enjoy the very different holiday season, and we'll be talking with you soon.
Thank you
so much, Jason.
You bet.